Good morning, traders, and welcome to the All Markets webinar with Bruce. We're going to go through the order flow. Good morning, traders, and welcome to using Bookmap, or going through the analysis using Bookmap of the order flow in any market you guys that want to take a look at that we can connect to, futures, stocks, or cryptocurrencies. We have this webinar every Monday, Tuesday, and Friday, 10 a.m. and it's for you guys to understand how to better use Bookmap. So ask questions here, and we'll show you all sorts of great order flow setups so that you can understand what to look for in Bookmap and how to take advantage of it. All right, so I lead the trader education here. We do have many different other traders within our education here. So if you go to bookmap.com, click on the More button here and go to the Learning Center. Okay, you can see courses and other materials in here. You can see all of our streamers in here. You can hover over them. You can see what assets they trade and when they stream. Okay, so if you scroll down a little bit further, you'll see the calendar here. You can click on the event and you can add it to your calendar. All right, so as you can see, we have 18 different traders here. It's actually 19. We need to add another one in here. So we offer quite a bit of education. It's all live analysis as well. Okay, forward looking. If you want, you can reach me at Bruce@Bookmap on our Discord server or Twitter @FlowOrder. And let's go through the disclosures and then jump right in. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here. Wow, we got some nice volatility in here. We had the non-farm payroll here. You can see just at 8:30, and interesting event on multiple fronts in here. Just note, for those of you new to Bookmap, see how the liquidity dries up before the event. Funnily enough, here at this kind of 38 or 39 level, liquidity thinned out a little bit, but it stayed in the book. Okay, that gives us some insight. That tells us something. Anyway, the numbers were kind of mixed, kind of bad for the economy, but like that is actually good for the economy, meaning that the Fed won't raise interest rates, that they're through the raising cycle. So anyway, let's just take a look here. We have our 9:30 cash open and a real nice bump up into 45.50, the figure, and then we've sold off since. So it almost all the way back down to this non-farm low, down to kind of this previous swing right here at 45.20, which has been a pretty important level in the higher time frames. Anyway, let's before we jump into all of this here, I mean, this is a very strong and powerful move to the downside. We will first take a look at our bigger picture, right? And we're going to extrapolate from the bigger picture to start to drill down and look at very specific levels. And we're going to look at the bigger picture in terms of order flow as well. And I can detail that more if you like. And then we're going to, zero or kind of zoom into Bookmap and kind of home in on some potential opportunities or levels of interest here. All right, so what's going on the daily chart? All right, so let's actually look back a month here, so we have a little more data. As you can see, these were some really, the other day this was very strong move to the downside, and it closed to the downside. Yesterday as well, kind of all over the place, but it came down to the lows here, and it closed below the previous day. Today we are within the range right now so far. So we saw that big spike up, and it just tested yesterday's high, and it's right back down now. And you can see that this is just turning a little bit red-ish, kind of green-red right now for the day. All right, so we really want to see this here, and we're looking at this swing low here for the day, which is at Well, it's 45. No, I'm sorry. It's 25 points away or so. 20 points away at 45.05. Right now, yesterday, I also want to go over this because yesterday, just look at on the hourly here. Here's our gap. Here's that move down from the on Wednesday. Here's Thursday's. God, I'm sorry. What is it here? Yeah, today, here's Thursday's activity, and then these last two candles are today's. This is the cash session hourly chart. Right, look at the gaps in here. Huge gap, of course, on Wednesday. Also, a gap here on Thursday that did fill. It's this gap here that I want to point out, because I was looking at this move here, and I thought this is a really odd place on the daily, especially. Like, why are we seeing buying pressure come in down here kind of, in the afternoon? It was kind of odd to me. Didn't quite understand it, and then it all made sense here on the hourly. Okay, there's a gap here. Okay, so this was back on I forget what day this is. It looks like July 10 or so. And you can see that we filled that gap, and then we found buyers in there. Okay, that was early on in the session, and in the afternoon we closed higher. We filled the gap, it sold back off, and then it's just really back and forth now. You can see the wicks on both sides here in the hourly. Okay, move to the upside, test these wicks up here, move to the downside and test these wicks. Now, when I'm talking about wicks, there's two things we're going to look at in the order flow. You can say this is rejection up here in your auction market theory or whatever you're looking at, your trading style. It is, but what it means though is a combination of things. It might be some sort of reversal pattern, but basically it can either exhaust out, or it can be absorbed and then retest and exhaust. I mean, there's a lot of different ways of looking at it, but absorption with lots of limit sell orders on the other side here, or exhaustion. No interest in buyers to take this higher, and then we look for sellers to come back in. These are some simple ideas that we'll look at again and again in the order flow when we start getting into Bookmap. All right, so that's what we mean when we start to talk about these wicks up in here and what the significance is of that. All right, so let's look at the 15-minute chart here. Yeah, you can see it just came above the swing here from the other day. Totally rejected. Sellers come in and pound it all the way back down. We have not gone below this 17 swing right here, 45.17 in the S&P. Okay. All right, so let's see here. Any questions at this point? So what are we looking for? Well, we're looking for the auction here on this 15-minute chart at some of these critical levels, like down here at this 17 or up in here. All right, so right now we're kind of in the middle. So that's on the 15-minute chart. Let's zoom in Bookmap and take a look here. Yeah, I mean the 15-minute chart's not bad, because like these are some pretty big swings you can see in here, and there are nuances even in on very small time frames in here, but these are the levels of interest we want to check out and the order flow around these levels. Number one is this one up here. Okay, this is at the cash open at 9:30. You see the move up into high liquidity up here at 45.50. You see it kind of exhaust out here. Let's just zoom in here. I want to cover this. We'll move forward into it and we'll catch up here into the live market so that we're kind of reviewing here. And then we'll go through it quickly unless you have any questions so we can get to the live market. But this will help you comprehend the order flow at these levels. Okay, so very strong move here at the open, as typically is. It doesn't really even trade up into this high liquidity up here at 45.50. It's just shy of it, and this is what we mean by exhaustion. Okay, so see, look at the strong buying volume up in here, and then here, and here we're not seeing much at all. In fact, we're starting to see some sellers here back and forth, but here's a big sell dot in here, very thin in here. selling starts to pick up. Sellers are below this swing here, and that's when they really start to pick up though. So what this means is on this, in this kind of level, trading level, or even, you know, maybe a little bit bigger, in this trading level in here, we're starting to find all the sellers below this swing, and then also below in this swing. We're looking for the big red dots, and we're also looking for, that's the aggressor, and that pulls the market down. Okay, this is what moves price, is the aggressor volume, the market buy and market sell orders. And then the liquidity is these are the passive orders. These are limit sell orders up in these areas here. And we never even tested into this high liquidity in here. So that's not a good sign for the bulls. They'd never even tangled with the figure. All right, so anyway, we can see the move down, and then it trades all the way down to see where this these buyers initiated this move. Okay, we see this all the time in here. Right here, they broke out. This is where the retest came, and then we did bounce and finally get up into that figure. Okay, and then this is our double top in here. All right, so now in our double top, what do we see? Okay, well, here we had some exhaustion. Okay, in general, here is absorption. Okay, look at that big transaction right into 45.50. Here's one above it. Here's another one into, after they got filled, they added even more liquidity in here to be sellers at these price levels, and the buyers took them on and traded. Okay, so at this point, we know that there's some buying interest in here. And we know that they're meeting high liquidity into these passive limit sell orders. What happens after that is what we're looking for. The clarity. Are there buyers back up above it here? Do they have more buying pressure in here? And clearly they did not. They just kind of gave up. And then the sellers certainly didn't give up. They came in hand over fist. Now, this is what we want to look for. This strong impulsive move driving price away from this range or this value area here. All right, and then here it is, and that's what it looks like. Now, it's not the strongest, but it's not bad. And then, you know, we have some new content for you guys that we'll be covering pretty soon. But here's like a flag pattern in here, and this is very, very typical. I mean, God, I might even use this example. Here's our strong impulsive move. Here's our pullback, and look at the pullback. It's shallow. That's what we want to see. We don't want to see a lot of buying interest in here. And then we see sellers again for the next impulsive move, on strong volume and strong price movement. Okay, that's a very good pattern there, right, to look at. And it moves it away from this area of consolidation up here. And it's searching for and establishing a new value area. Okay, price is trying to figure that out right now. It continues to the downside until it can figure that out. Okay, this was that really strong move that we saw after. And then now, let's get caught up here. So any questions on this, getting caught up with a double top and understanding the relationship between liquidity and the aggressors at this important level, which is the half figure of 45.50. Okay, no questions? Good morning, HE and Stan. Let me know. Happy to go through it. Some of you have reached out on Discord and you had questions. So let me know if you're in here. And ask your question now, and I can answer them. Okay, there was, I think, a question about high liquidity being a magnet or not, and you know, to explain that in more detail here, and I'd be happy to do that. Okay, so let me know if you're in here. So anyway, otherwise I want to continue on with the live analysis. All right, so Yeah, it is really all over the place here. Look again. Now, this is like we're understanding these levels here in a very, very different way. Okay, we're understanding it by the behavior of the players at these levels in here. These are how these patterns evolve. Sellers come in, buyers come back in, a little bit of selling, a little bit of buying moves it back up. But look at above the swing here, the buyers start to come in, especially in here. Okay, they're going to move it back up and test here. Okay, that's the minimum test I would look for. Maybe here as well, this kind of value area here. And then there was just more buying pressure. The next one is here. The next one after that is the high, or here at the high liquidity. This is a really easy one. It went right up to the high liquidity. Okay, but these little areas in here, we never know what's going to happen. But we do know this. Look at the buying here. It is strong. Compare it to the relative selling over here, relative volume. Okay, so and then we also look at the order book in here. So this probably wouldn't be a bad area to take some off here, right here, because there's liquidity there. And we don't know if it might hit this, might exhaust out, might find sellers, and then they'll trade back down. Now we have another thing in here that makes this strong or stronger on our side. It is this liquidity that is bidding up at higher levels underneath here. Okay, we talk about the skew and the auction all the time in here. And let me take the volume dots off. In fact, we're just looking at price action with best bid and offer, and then the liquidity heat map. So what we have here is a price movement up, and then the book here is now skewed because of this liquidity in here. This is what the book looked like before. High liquidity up here, high liquidity down here, right? So like a 25-point move, in fact, right? From 15 to 40. Here, all of a sudden, we have a skew in that auction. Okay, the bigger skew is this liquidity here at 25. Now we have a 15-point range in here. Okay, so what would be kind of the middle of the range? Well, it'd be 7.5 points up, somewhere around in here, right? So it comes up into that area, and now they're still on the bid in here. If they're on the bid, the question is, and you can see the offer is starting to add a little bit higher here. They're kind of shifting, but let's just say it's the same. The question is, when we start to see the skew in the auction, what is the reaction of price? What do the aggressors think about this? That's what we want to understand. Okay, so in this case, this is starting to answer that question. This liquidity down here is repelling price. We're not finding sellers interested in trading into it. So it's not a magnet here. The magnet is up here, and we know that there's buying interest. So we're looking for this to transact. All right, does that make sense? Okay, and it worked out. Obviously this is all hindsight. This is why I don't like going over hindsight. But anyway, we can still learn, and then we learn from that, and then we're going to apply that to the live market here. Okay, so now let's just take that forward here, and let's get into the heat map. Well, it's looking pretty similar here. Now there's a difference though. This liquidity transacted in here, it looks like, right? This one for sure as well. This one now it looks like it transacted. Look at the skew in the book. Okay, and the price, we're still finding buyers here, and we're still finding buyers in here. Now that's going to be a bit of a stop run. We want to see if that maybe rejects, comes back in, and then trades back down. However, and the reason why would we look for that? Why would that be more likely in this than this case here? Okay, we just covered it. Well, it's because this liquidity is getting filled on the way up. All right, so if it's getting filled, that means that these are sellers in here absorbing that buying pressure. Okay, so this means that maybe we get a stop run up here. And if we get a stop run and it rejects and comes back into the range, and we find sellers, then we're looking for this to be the next area of liquidity, down by the swing and down by the liquidity down here. right? So this is how we can start to piece together the even though we had a skew in the order book in here. Right? Now, interesting thing is we're still finding buyers here. Okay, they're still hitting it or lifting that offer. Okay, and there's our big stop run now. Okay, now we got it. The red line down here is stops. Let me get rid of CVD here. So we just have stops and icebergs. Okay, icebergs is the blue line here. All right. We have a stop run. Do we have icebergs on the other side? No, icebergs are actually trending along with the direction of the stops. Not a whole lot of icebergs though. About 100 or so on this little kind of move up. All right, so now you can see high liquidity here and here. And let's see if we get a skew on the offer, and if we do, we see if we get some sellers in here and try to trade back down into maybe 32.5 or 32. Anyway, guys, what we're kind of covering in here is understanding the auction and the order flow. When you start to understand the order flow in here, it makes sense that if we just have these sellers getting filled in here, that now we're starting to look for less buyers. Okay, we're looking for it. We might not get it. We've seen trending days that are just incredible. There's high liquidity on the offer all the way up. Doesn't matter. Buyers take it. Okay. Now, not only did we have non-farm, if you want to mix some of the fundamentals in here, we had some really good numbers, I think, from Amazon, and not so good numbers last night from Apple, at least iPhone sales. Anyway, here's our skews. Here's our skew here. See how it's shaping up on the offer? It's kind of bluish. Okay. Right, so now do we get sellers in here due to this kind of this liquidity in here, or do we get buyers in here? Trying to feel it out. And other traders are trying to feel it out too by providing this liquidity. Okay, so here's our move into our 32.5 and almost 32 and 32. Yeah, there's 32.5 right there. Okay, so just want to we're doing this without looking at the volume. Okay, we're doing this by reading the order flow historically, okay, and current order flow here in the order book. Okay, so this would be like reading your dome, except this little window here, everything to the right of the vertical white line is the current market. Okay, so you'll see the heat map change in here. It will be reflected by the change in the liquidity here in the current order book, or COB. This is the S&P E-mini, James. I've got the NASDAQ E-mini as well. We have Tesla, Apple, and Bitcoin open if you want to take a look at one of those as well. Or maybe you have something else. So anyway, like this is a great exercise to go through to start to understand liquidity. Okay, and how to apply this to your trading in here. Now we can turn on the volume dots and we can maybe come in here and confirm some of these areas in here. And yeah, high liquidity is transacting in there. Okay, and now we're starting to see a bit of selling come in and a bit more here. And we do see a lower high, another lower high, and I don't see buyers in here. Okay, so let's see if this can continue in the trend here. Right, so something like this here. So we're looking for exhaustion up here. Now we might not get that. Okay, that would be, we're going to go through the scenarios in here. What settings do you want me to see, Shay? We can go over the heat map settings. Okay, these are my heat map settings. They're default, I think. If they're not, they are now. I just hit restore. And then volume bars and volume dots. Volume dots here. I do not have any of the filters for minimum and displayed volume or trade size. And I have clustering on just a bit here as smart. Okay. I just use a little bit of it. I think by default it's in the middle here, right? It's a little much for me. I want to see more details, okay? But I don't want to see all the details. All right, so here we go. This is what we were. This was the second scenario. We're just going over the first scenario. This is our second scenario, and it is clearly unfolding. Okay, so what happened in here? Right? Because we're looking for, we saw some selling. We know that there was absorption, and we saw the selling in here, and it kind of broke this little trend line, or even this swing here, right here, and we're seeing buying above it. Pretty strong buying. So next levels are this 38, and I know it's just transacting. I think we can get to 40 though. All right, so that was our an important area up here. I know it's been important over the week here. Actually, 43 up here looks pretty good as well. Okay, on these little areas in here, these swings. Okay, so what you're talking about or asking Shay is about what time is, the time frames. There are no time frames in Bookmap. I mean, we divvy it up here with these vertical gray dotted lines. So right now it's 5 minutes between each one. We can zoom in and that'll change though, and now you see it's 2 minutes between each one. Okay, so there's a few different ways to look up time frames. It's actually covered in our learning center. If you go to the getting started here, we talk about the navigating through the chart and time frames right here. Okay, it's 1:47, and we talk about how there are no time frames in here, and the what we're showing is pure price action. However, we do have this tool up here, and the only reason we have this tool is because it was requested. Now we're using this as a time slice tool, and this is turning into a really nice move, guys. So it continues on up. We're still looking for swing up here around this 43. Okay, and then I would be looking to take some off up there, maybe even front run a little bit. So this is a powerful move. We have high liquidity here at 42.5. Yeah, I don't have a problem front running some of that and taking some off right now. All right, that's how I would manage it. But this is pretty strong, consistent move. That's great, but how much more does it really have in it? Okay, looking for a pullback now. Okay, around somewhere around here in this area. Right. So anyway, the time slice tool, it works here. You can click on this, and then let's suppose you want to look at 15 minutes of data. This is not 15-minute time bars. What it means here, if I click on this, okay, you actually see it's like 2 minutes between each vertical dotted line here. What it means though is from this current market line here, vertical line, to this left edge here. This is pure 15 minutes of sliding data. There's always 15 minutes of data. That's what it means. That's how it works. Okay, so you can do some studies in here on very specific, like your columns in here. Maybe you want to look at like what's the last 15 minutes of data look like. Well, here it is. Okay, it's this nice little B-shaped profile that failed, and we see the move to the upside here. All right, so anyway, this time slice tool, they're sliding data here. We use many times over in Bookmap because you can use this zoom tool as well and zoom into a very specific area. So let's suppose like, let's just go from here to here, and you can see that only that data is now within my chart. Okay, and I can study it then, and I know exactly what the profile looks like, imbalance indicators up here, CVD or stops and icebergs, etc. Right, so we use this concept over and over again. Watch that video. I'll put it into the chat for you, and you can I should answer your questions there. All right, there you go. All right, so let's go back. Still looks good so far. Now let's just take a look, going through the same process we did. Now this might turn into another a bullish flag here, but I mean, so far so good, right? We made slightly lower high, just a tick or two, but I'm starting to see a bit of selling in here. However, like, this is pretty bullish here, and if we can get up here and a little bit more buying, we should see it trade up into yeah, 44, 45, you know, 43, 44, 45 basically. Okay, so we're looking for that. We're getting a little bit of insight here. Here's high liquidity that comes into the book, and it repelled the buyers actually, right? So we're learning from this order flow in here. Okay, so now the book is between 43 and this 38 3/4. Here's our skew. Now look at this. Buyers seem to be attracted to that liquidity. Okay, well then trade into it. We should see the green dot here. And they should, we want to see if they have enough buying pressure after 42 to trade on up and get the breakout that we're looking for here. Or are these guys going to pull that liquidity away, and maybe we get a flip here from offer to bid? And I'm still looking for them to trade into them. There they go. There's our green dot. Okay, and that was it though. Okay, so we immediately pulled back, right? So we want to see the transaction and then the follow through. Like, what, you know, we're still looking for buying pressure. Otherwise, it's absorption. And here we go again, retest. All right, looks pretty good. I like seeing the buyers up here. All right, buyers should be able to lift it up into 43, 44, maybe 45. Okay, there's 43, and they're still buying. Okay, these guys did stay in the book, so they are still absorbing in here. Okay, and we're looking for a bit more and not getting it. Okay, now it is auctioning back here again. So it's just a pullback. And a bit more if we can auction up here at 43 1/4 or not. Okay, there's a see exhaustion here and buyers on the other side. So you can look at exhaustion here. It's a higher low, and it exhausted here many times over. No sellers here. Buyers up here. That's when we're looking for the buyers to take it at least up to here, and then we can get maybe some follow through, right? So looking and noticing absorption on exhaustion on pullbacks is something to you know, really look at here, because you can go back and study this many times over, and you can put this into a trading plan. And you can see that you know, a lot of times this works out pretty nicely. It's a low volume pullback basically, strong volume here, very little volume in here, looking for exhaustion, buyers back up to the top of the range and try to break the range. In fact, you can even look at that and say, like, this completes a flag pattern. Okay, mini flag pattern there. Okay, up into, and why you would target this liquidity. Okay, and that completes the pattern. If you're a pattern trader, you're out up here. Okay, easier said than done, but it's here, it's visual, we're not making it up. Hey, guys over in Discord, Slowdown, Sloth, HE, and Stan, anything you guys want me to take a look at here? Anything kind of on your minds lately? You guys have been doing really, really great work. Rob as well. Sorry, Rob. Just scrolling up here through it. Trader, as well. I mean, really, really great work. Jack, let's see Jack in here. Deborah, good morning. All right, so that was it. The move up into the 44, and then here's our move back down. See the exhaustion here, and the sellers coming in. Okay, well anyway, this on the bigger time frame, higher time frame, we were just looking for the move up into here, right? That was it. You know, there was certain little areas in here, and then I can't recall which ones. But it was the swing here maybe, and then the swing up here, something like that. Triangle pattern. Yeah, you know, that's a continuation pattern, Floyd, and we're starting to, you know, cover a lot of the continuation patterns, you know, wedges and triangles, pennants, flags. To me, it's just kind of a different flavor, but it's basically the same thing. Mean reversion trade is something different. What that means is basically that the market is auctioning outside an area and it's not really being accepted. So just think about it, and you know, the auction market theory part of it is very much like, you know, if you have your small business and you know you put God, it just reminds me of the scene from Hudsucker Proxy on hula hoops. I don't know if you guys know the scene in the movie. Is really, really well done. But they start off with price at, like, you know, $5 or $3.99 or something like this, and it's just too high. No one's interested in buying it. So what do? There's basically, what that means is there is no demand for the product. If there is no demand, well, then they're not willing to pay that. And now this is a one-way auction. It's not two ways in this example. Just note that the markets are different in that sense. However, so no one's interested in buying. Well, you're going to reduce the price. Okay, you continue to reduce the price until you find that demand, and that goes into your 101 economics, like where supply meets demand. You know, those two crossing lines. If you recall the very, very simple economic fundamentals. The mean reversion would be that, well, you know, if price is kind of searching for its value and it can't find it outside of its range, it will revert back into the average of that range. Okay, so that's the concept, and there's many variations of it within the order flow in Bookmap. Okay, one of them is exhaustion. Okay, it will exhaust outside of a range. There's no interest, especially maybe after a stop run, comes back down into an area, and it trades back to the mean. Okay, so this one here is not exhaustion. Okay, this is an impulsive move here, just getting outside the range here. Okay, or maybe it's a smaller range in here, and then you know, look, you can divvy it up in many different ways. There's a smaller range here, the bigger range is here. Okay, so anyway, like, it kind of trades outside of it. Now the move initiated here. I can already see this is getting too complex. All right, so anyway, what we would like to see is a little different variation here. So we get this move, okay, and we can double this move here, and then we can see that it measures out pretty well here from one move with its impulse power, and then the pullback, and then the next move. Now this kind of magical measured move in here, I want to be very careful in covering what this means. Basically it means that there's so much buying pressure that it's kind of equal to a previous amount of buying pressure. Okay, now there's also stops that are being triggered along the way, etc. You know, that's kind of what we're starting to understand in terms of these moves and measured moves. Don't buy the story on measured moves and fibs and all this kind of stuff. We want to understand the measured moves and buy the price action and the volume. Okay, if you get our strong volume, we're looking for you know, something similar to this move here. All right. Okay, so anyway, now that's some, you know, there's so many different variations on what I just had talked about, because you might get a strong kind of impulse move here, very shallow pullback, and then you might get a strong move back up here, and you might start to get people interested on a higher time frame to get involved in this market at that time, and you get like a double or triple the move in here on the next leg here, right? So, or maybe you get a strong move and then it kind of peeks its head above this little range in here and there's no interest, and it does half the move. Okay, and you can see it in the volume maybe that it's not quite as strong, and therefore, you know, it doesn't have the same power behind the move. All right, in this case regarding the mean reversion, well, we have absorption here. Okay, so it traded into high liquidity here at 43, and we knew that earlier. We saw 43, 44, and also 45, and we were looking for those areas as a target. Okay, so it traded into that liquidity here at 43. It traded into that liquidity up here at 44, and then there was no interest in taking it higher. And what does that mean? This was totally absorbed here. Okay, they absorbed all that buying pressure, okay, into that high liquidity here. Right, so after that absorption, no more buyers, and sellers start to come back in. They're able to bring it back down to where it initiated here, some back and forth in here. Here's where you can see exhaustion again. Okay, so now let's just take a look at where might this go in your mean reversion. So let's just use the CVP column here. And you can see that kind of another B-shaped profile here, even with all this buying up in here. So anyway, what you're looking at in here, or what we're looking at for a mean reversion on this time frame, would be here, okay, at 41.50. And that's the average, or this is the mean here, okay, within this range in here, right, is this price level. The most traded level, now this was traded quite a bit here, and this one too, but this is the most. Okay, you can also look for to the other side of the range in here, and for it to exhaust out and come back again in here to the mean. Right now, I have a question for you. Let's see, Floyd, on what does it take to move, because we haven't seen the current price action. We don't know what happened here. Okay, but we're up at pretty lofty levels after a pretty strong move. I'm looking for a pullback, and I see the sellers coming in, and they've traded into and through that mean. So I'm looking for them to kind of explore the other side. And if we get the sellers, I can see them starting to come in here a bit, and I know that there's some sellers in here. Okay, so where might they go to explore? Okay, and what are you looking for them to do that? Okay, we're looking for the aggressors again. They're the ones that are going to explore outside of the mean or outside of the value area here, and usually or typically that happens on very strong volume. Okay, so what do we get here? Okay, so we got this pretty strong volume down here. That was it, and it kind of came down into this little level here. Right, this was kind of a flag pattern on the way up as well. This is where this move initiated here. Okay, so let's just take a look at that. That's why we take profits, or look to take profits, or suggest to take profits in these areas here. Okay, because either where they initiate or some of the swings in here, like that's not bad or that's not bad. And then next one would be down here, right? But it's a zone, right? And then we're going to read the order flow within it. Okay, now what happened here? Well, we just kind of tap the bottom of it here, this one here. Okay, and then we see the move back up, and we're back into this level. So this again, this is high volume in here, but we didn't get the price action. Okay, we need both, and we get buyers instead. Okay, back to the top of the range. Now we have the potential now, because we're back in here and we're actually above the mean, and we're above the mean on some volume, and it's back and forth in here. But my point is, like, if we can get back above that mean on some pretty strong volume, we can come back up and explore not only the highs here, but up above. Okay, so this would be your trade from the inside to the outside, and price exploration instead of a mean reversion trade. Right, so and you can look for that all the time. Now this one, you know, it kind of did it, and then it failed. So, you know, this is really back and forth in here. So now that brings up a bigger picture issue in here on all of this back and forth in here. Let's take this and parlay it into something more. Slowdown had talked about some of the Wyckoff distribution accumulation areas. That's what's happening up here. Right, so it's back and forth in here. Now, who's winning the battle? And we're looking at in here now. Okay, and you it can still be you know, your volume or market profile, but we're also talking about a distribution area and a compression area as well. And we're looking to see if we can trade outside of that area and get price discovery. Okay, you can see that right now we got another mean reversion trade right here. Okay, right back to it. Okay, now let's go through a few scenarios in here. First scenario is like this fails and we go back down to the downside. And the reason I would look at that as the first scenario is look at this offer in here. And it's one player here. We know this very likely here. Look at all of the same level. Now see, he just pulled at the same time as well. Here it is though. Our little that little white line in here is showing the large lot tracker. It's one player who's just layering in here. I don't know how many, maybe 50 contracts or so, something like that. Right, and that's one individual actor. And that's kind of holding price down. However, what did he do? He pulled it. He pulled it away. He skewed the order book now. All of that supply is gone. And what's the reaction? Wow, okay, we found buyers. Well, buyers are likely now to trade right up to 45 then. You know, and we're above the mean as well. So we're looking for buying pressure above the mean here. Here they are on the bid at the mean. Okay, so do we find sellers interested in this liquidity here and trading it back to the mean, or we find buyers that want to trade it outside and explore outside of the mean or the value area? Okay, and we're going to read the order flow here to get our answer. Okay, so here's our little kind of double test, double top up here. Okay, and I didn't find any buyers. Now the guys are pulling here. Okay, well, I'm not interested in this unless we can get down below here, this kind of 41 3/4, and we can see some selling come in. And then I'm looking for bottom of the range and then maybe outside, inside to the outside here. Okay. So yeah, now we're back up here, and now it's looking pretty inevitable for 45 and maybe more. All right, so that was the read in here. We never even we never even retested the mean in this little example here. Okay, so and you can see it. Here's another skew in the auction here, looking for 45. Okay, these guys want to trade here at 45, it looks like to me. Okay, so they want to be sellers there. They're not pulling, and they're getting filled now. Okay, great. All right, and they're still in here. They're still, it ate some of their liquidity, but they're still in here. Do we see more buyers still interested? Yeah, there they go. Okay, now there's more buying back up above it. Let's see if we can get expansion, maybe up to 48 now. Okay, now this today's kind of tricky in the sense that like this is being gamed many times over, and I think that's clear to see, right? I mean, this larger player is gaming this level here, right? So it makes the read a little bit harder in here, but we did look for the move to 45. Okay, and then we did see buyers back up above it here, but now we're back below it. Right, and he came in here, another trader came in here at 46, pulled that liquidity here, and then added it higher here. Okay, we don't know who it is, but it's likely the same player because the moment he pulled here, he added it up here. Okay, a point higher. All right, so anyway, it makes the reading a lot harder here, just around 11 a.m. East Coast time. Okay, we're covering a lot of stuff in here, and I'm going through it pretty quickly. Anyway, if we step back and take a look at it here, this still looks good for a continuation to the upside. Okay, in the bigger picture here. Okay, this is pretty strong volume, pretty consistent. Looking for another impulse move on up into like 48. Maybe we can get to 50 here. All right, so that's a different time frame than what we were just looking at. Okay, and that would be kind of from the inside out, not the outside in. Okay, and the moment I say that is the heavy selling comes in. So like I said, this is kind of tricky here today. And we're looking for our buyers up here. And we even had fuel in here. We had these sellers in here, but buyers just didn't show up. Now I like seeing actually some selling in here. And for them to be squeezed to the upside here. Yeah, on the scope of things, I agree with you. There, maybe we can find a better example on a higher time frame. It's a lower time frame, look here. Well, here's your mean right here, right? Okay, right here, 41.25. Okay, that's your high volume node, okay, or point of control. And we're above it though, and that's a good thing for the bulls. Is the red line? Yeah, those are stop transactions. Going through time and sales. Don't quite understand what you mean. Oh, okay, Tom. First off, like what we're talking about in terms of buyers or sellers moving it outside of the range. Yeah, I mean, you always need a buyer for a seller. Okay, that's just how it works. However, if you take all the buyers or the sellers at one price level, then the next level, all of that liquidity is taken, so price will go to the next level to trade there. That's how the price moves. So what we're looking for then is more buyers than there aggressive buyers hitting the market buy order than there is liquidity limit sell orders. I hope that answers your question there. And is the red line stops going through time and sales? I'm sorry, I don't understand still. The red line down here, these are stop transactions that work. The way I've got the settings in here is cumulative volume delta, basically, of the stops. So it's just taking if it's a buy stop to the up, that's triggered, it'll be a positive value, and then if it's a sell stop, then it's a negative value, and that's just plotted over time. Same with the icebergs, and you can see the axes are not the same in here. This is very different than how Scott looks at it. Okay, I like this view. For me, it just works better. Okay, you're welcome, Mike. Is the next stop buys compared to, is the net stop buys compared to the net stop sells? Well, it just continues to add them together, right? And then that would be the current. Here's our current view here of stops is negative 750. Now this is very most likely going to be different than what you show, because if I zoom all the way out, this is when I started collecting data. I don't know, it's around 6 o'clock this morning or so, and I started to get some data here. Okay, so if you had to open, you'd have to open exactly at the same moment that I opened up my Bookmap to get the same number. Okay, because it's cumulative. All right, well, the market is struggling up here. All right, and look at here's that liquidity coming in, high liquidity coming in, followed by sellers. Okay, that's enough for buyers though to come back in and trade into these guys, at the discount here. Right, so it tested the outside of the range or the bottom of the range here, and now we have buyers very interested in this liquidity here. Okay, so there they go. Okay, now let's see. I'm looking to see them trade into and through this here, and then come up to 47. And now it's kind of asking a lot. I mean, these guys are certainly staying in the book. So we continue this kind of back and forth in here. What would be nicer is if these guys, it would be more insightful if these guys pulled that liquidity and maybe flipped to the bid, and then we found those buyers, and they won't be absorbed. Therefore, they can take liquidity at these price levels and move price up into 47. So here we got a skew in the book here. Okay, but we're in the middle of kind of a balance. It's balanced between 43 and 47. We're right at 45. Okay, so that helps, but let's see. Now see, we're seeing this kind of being gamed in here again and again. Higher liquidity now here, back where these guys were earlier. Just a tick higher. And do we find buying pressure? Yeah, they're trading right into them. There they go. Okay, so the transaction took place there, and he's pulling at 45 and a quarter. A lot of it was. Okay, so we're just going to read this kind of 1 point range auction in here. We're looking for our buyers up in here. Nothing. Exhaustion. See how we can see exhaustion, and the sellers will take it back down to the bottom of the range. And they're auctioning here, actually. There's transactions here. Okay, so maybe we can get back down here again and see more selling. Maybe. If we can, then I'm looking for 43. But instead, we're back up here, and now it's auctioning here, and we're getting buyers up here. There they go. Okay, so now we're breaking it. All right, let's see if we can get a bit more buying pressure in here, not sellers. No, just range bound. And I'm looking again for this move from the kind of inside to the out. And let's watch again. We're right at the point of control. There's some exhaustion, there's some selling. Selling. All right, let's see if a little more selling here. I think we can probably get down to 43. Again, just same process here, right? And trying to understand, like, do they have enough selling pressure to reach outside of the range? And then maybe get price discovery. And, you know, clearly they didn't. Right, now it's the opposite side. It's like a slingshot here from one side to the other, and now we've got the move into 47 intact here, right? And there's no liquidity in the way now at here, 45. This guy's kind of out of the market, right? Yeah, I understand it's tricky in here. This becomes kind of food for the move down here. All of this in here becomes food. It's certainly like once the buyers get in back up above here, and then there's lack of liquidity here, and we can get that move. It should be a stop run as well. It is, and you can start to anticipate the stop runs here, because you know that these people in here, these traders in here, they have it wrong, and that's what you're looking for. And now the question is, can we continue? Right? Did it even regardless if it's a stop run or not, does it accept? Okay, that's what we're looking for now, is acceptance. Okay, so in fact, it's even done as mean reversion kind of here, and we're still seeing buyers here. All right, so then I'm looking for buyers to trade back up, because it looks like it's accepting between 45 and 47, and we're finding buyers in here. Let's see if they can trade into and through 46.25 on up into 48, etc. Okay, maybe to 50 that we were looking for earlier. They could be some trader pushing us into liquidity. Yeah, I mean, this is a pretty good example of some of the gaming going on at some of these price levels. I mean, I think I can make a pretty objective argument with that by seeing this high liquidity like this in here, right? And then as soon as it starts to look pretty good, these guys throw more liquidity in, but we see that there's buying pressure. And then we see looking for sellers to maybe take it down to these guys. Instead, they cannot. They become the food here, or the fuel for this move higher, right? And then now we've got our direction, right? And we know it's a stop run, but we know it's still accepting here. So that's what matters. And we're at the top of the range, and I'm not seeing buyers now, though, right? So look out. That's why, like, you might want to, like, I know these are micro ranges in here, but it's the same on all time frames. So up here, we can consider, like, taking some profit, because I don't see any support here in the book. Sellers can take it right back down here really quickly, and we see exhaustion up here. Right, so that's what happened at the top of the range here. Remember how we started off with the bigger picture double top, and we saw exhaustion actually on the first one and absorption on the second one. This is the opposite. Here's kind of absorption here, here's exhaustion here. That's typically what we see in the second leg or move up. All right, just to refresh our memories here, let's just cancel all and then look at this move here. Here's our double top on the higher time frame. Okay, so we saw kind of it exhausting out here, and especially here on this little leg here, and the sellers brought it down. Okay, then we come back up here and then we get absorption and even more absorption here, and just no more buyers, and the sellers just come in hand over fist and move it away quickly. It is in their interest to the sellers to move it away pretty quickly, so that it creates panic and fear that look, I hate to say some of these things and speculate on them, but like, the quicker they can move away from here, any trap buyers in here are going to have to make a quick decision to what to do. So I would imagine that's what fuels these moves like this. Okay, it's like, oh boy, I'm getting out. I'm looking for the move higher, looking for the move. I believe in it. I believe in it. I believe in it. And then they're going to be put to the test here. All right, but we can read it in the behavior here. That's the key. So we saw the absorption on the second leg up here, and then well, you even have high liquidity tested under on the backside here, and then they pull in here. In fact, a little bit of a flip of the book, almost. Okay, so yeah, so this move, this stop run, we were looking for a move back up to 47, 48, etc. And then we noted, like, okay, exhaustion, look for the seller, and no one underneath here. In fact, look where they are. They're on the opposite side. We want to see them, right? They're on the offer, not on the bid, not supporting this breakout. And that's where you can see the reaction in the sellers bringing it back down. Okay, back down to this swing. I still think we can get down to this 43 on this move here. Right, again, the quick move here, and we should see some stops being hit down in here too. Let's see here. Beck, you were just able to get into the comments. Totally missed the explanation on orders acting as magnets. Okay, yeah, I guess you were asking earlier. We can cover it again. Yeah, it's about the context here that really matters. Okay, about supply and demand, and do people want it? We're going through the Hudsucker proxy example of the hula hoop. It's a Coen Brothers film, and kind of spoof on all of that product development, and which is brilliant. But it basically if there's a demand for the product, then and it's kind of scarce, well, then price should go up. Hey, this is just basic supply and demand type stuff. If there is no demand and the product is plentiful, price should likely go down. No one's willing to pay it. Everyone, you can get it anywhere. Why, I already have one or two or whatever. Why do I need another? I'm not going to pay more for it. We can see it here in the liquidity and the aggressors. Okay, the aggressors reacting to these areas of liquidity. Okay, so does it act like a magnet in general? Yes, especially on higher time frame liquidity that stays in the order book. That is where the market knows it can trade. Okay, so I can probably best illustrate it by looking at Apple or a stock. And the larger players, they come into the market here and they provide liquidity at these price levels. So usually the figure, okay, the round numbers. And they're basically saying to the market, We will be a buyer down here at these price levels. If you want to trade with me, I'm down here. Okay, so it's up to the aggressors now. Do they want to trade down there and transact with them? So what we want to, and that's the magnet part. Okay. So and then the repelling part is, if we've been covering that, like if we zoom in a little bit here and you see high liquidity come in and it skew the auction at a certain point, all of a sudden, like, there's a big new surge in supplier demand in here. And then the question is, how does the aggressor react to it? Do they want it? So it looks like the buyers want this, or I'm sorry, the sellers want this here. They're trading down into this high liquidity here. Actually, well, they never actually did yet. I'm sorry, they did here. Okay, but there's still more. Okay, but look at the offer now. Here, this is it right here. See how this repels price? See how that repelled price? Okay, more supply, no more demand by the buyers, right? So they traded into that liquidity now. They, you know, and this looks to me like a really, you know, potential spoof here. Okay, because high liquidity came in, but we know that this guy here is trying to get filled basically. And we get a skew in the auction here. And do we get any transactions into that liquidity in here? No, I don't see any, right? I don't see any transactions into this liquidity here. So this is acting like a spoof. Okay, it skews the auction. It shows more supply, and the aggressors come in and hit the bid and hit into this liquidity. Right, so here it repelled. We saw it in real time. I hope that helps, Beck. Repelled it, and then here it wasn't magnetic to it earlier, but it is now. And then look what the reaction after this. This is really interesting. About, is this a potential spoof? Well, it makes sense to me because this traded, and now below it, look where the buyers came in back up above it here. Well, where were these buyers earlier? They weren't here, but after this that we found them. Okay, so that's pretty interesting. All right, so that's how you can get these kind of, this would be likely be a stop run as well. And then did it accept or reject? Well, it totally rejected. It was back in the range and back to the other side of the range here, in fact. Okay, so now this might be, we get enough buyers in here to lift it up into 85 3/4, or you know, this 80, 85, 85 area up in here. It's possible. Okay, well, we didn't. It's back in the range here. Okay, but you know, this is how you can get even, you know, usually, I mean, usually you would go with the, continue to go with the move here, but you can get how you can get reversals is after this would be your head, this would be your shoulder, this would be another shoulder in here. Okay, or maybe it's a double bottom pattern here. Anyway, that's a little, I don't think we're quite ready for a reversal pattern in here on this, to be honest, but this is strong impulsive move. This is just kind of some back and forth, looking for another strong impulsive move down to 85. Okay, and then a little bit bigger picture. All right, so I hope that answers your question, Beck. A lot of good theories. What kind of criteria you look for to establish a stop for a trade? Any examples? Yeah, this is a great question because, like, yeah, all these great theories and whatnot. But Mike, these are like the concepts to then take and to study. All right, so you're welcome back. Because the what is really important is that a trader develops their trading plan, something they studied, something that they know has an edge. So these are concepts to go back and to study. Now we've gone through multiple, ways of looking at the market here. We talked about mean reversions, breakouts, flag patterns, continuations, reversals. Now take one or two of these ideas, and then go back and you could develop a trading plan over the weekend. If you go back and take one of these examples, like a breakout and a flag continuation pattern, and you can go back and retest it. You can use Bookmap's replay mode, okay, if you have data, and go back and look for these examples. Look for where would you place your stop. Look for the swings to begin with. Okay, understand the order flow within these areas here, and then where would you place your profit? Okay, does it make sense in a move, a more measured move, like a does the market have that much buying pressure or selling pressure to do a move? Okay, and if you come up with like maybe 30 examples over the weekend, you've got a trading plan. I mean, yeah, it's the initial stab at it, and it's something though that you can go back and start to forward test, and look in and replay mode, test forward, and then you get really good at it. Okay, we have traders all day long doing this in here. Doug is he does it with options. He has a very unique way of looking at it, which is excellent. Tom B, he'll be up in about 7 minutes or so. He's a volume profile guy. Okay, so he'll be looking at mean reversion trades and the price discovery trades that we've gone through in here. And then we have the algo boys later in the day, okay, from 2:30 to 4. We usually have Frank Morero in Spanglish Trades. He is off this Friday, so back next Friday. This has been a pretty choppy market today, I think. During this webinar here at 10 a.m. started here at 10:05. I was a little bit late, so we did see this kind of move back up into this swing here. Okay, so and we had our reasons for this. Oh yeah, we missed this to the downside because I was covering this double top and then carrying it forward here. Okay, and then we got into the live market, and then we saw this buying pressure start to come in here. We're looking for this swing and then this one up here. We knew that there was a lot of buying pressure coming in here, so we have our reasons too. This is this is going to be a low volume node as well, because look how much volume traded here, here, and here compared to all of this, right? And it is a bit low volume node. Yeah, so in terms of choppy markets, like I don't know, it's kind of up to you. I look for the move to kind of the price discovery, and I'm looking for volume. I'm looking for the order book skew, and I guess in a more choppy environment, like I look for this liquidity up here, maybe 48 to trade, get these buyers, and then maybe take some off, and then stop to break even. Right, that would be something that I would be looking at. I position myself looking for that potential move here, but a lot of times you just get stopped out at break even, or you take basically a scratch trade on that. Maybe you made a little bit, and then and then you got the scratch. Okay, so I think that we've gone through many of those in here today. How do I find a reversal in stocks? Okay, again, like we're looking at order flow. we're looking at the liquidity on the offer, liquidity on the bid, and when we start to see a shift in a direction and a shift in the order flow. All right, so yeah, I mean, well, let's. I don't have much more time, so maybe we'll have to find one in hindsight in here, and we're not really seeing much. But here's a potential reversal here. I mean, you look at your head and shoulder here, right? Now it's possible, okay, because all of this liquidity got filled on the way down, and now we're starting to find a little bit of buying pressure. All right, so and this might be your shoulder. Okay, we did not make a lower low here. We made a higher low here. Okay, so then you can look at even this little. You can even see a micro structural head and shoulders in here. Look at the buyers coming in. Okay, great. Right, so then this is where you can start to look for, first you can look for exhaustion in here. You can look for getting in here and carrying it on up into maybe the top here at 259, the figure. Right, so there you go. Here's your flag pattern that maybe start to unfold right now. Let's see if we get enough buyers now to trade right up into 59 or 59.20. Okay, and that would be this would be kind of a mini reversal right here. Which also fits into this fractal. It fits into a bigger move up into this 60 level here, or even bigger than that, right? So let's take a look at. I'm covering measured moves in here because it's something that everyone kind of is aware of, but we want to align it with liquidity, okay, and other price structure. So this looks pretty good up here, maybe 63, if we can get the buyers, right? So that's what we'd be looking for, right? So here's a micro or fractal move of that up into here, and then maybe we can even see more buyers in here to trade up into 60 and above. Hi, Hunter. Is that Jackson? NVIDIA, I don't have up right now. Sorry. How many trading patterns? Neville, this is a good question. How many trading patterns should one have? You should have as many as you can that gives an edge. You have to know it, though, back and forth. Okay. You might want to come to some of the other webinars like Scott, JTrader, Doug, Moby was on earlier, and they have very specific ways of trading. Does positions and options market all that volume matter? Yeah, it does. Yeah, the options have a big impact. So I would highly suggest that you come to Doug's webinar today at 1:30 p.m. Okay, just come to YouTube or our Discord channel at 1:30. It's really great stuff. Okay, so this little kind of flag pattern after head and shoulders is working out pretty well. And there's our move into 259. Right? So, and then we said 259.20, top of the range here. So it still looks good to me. Yeah, I think Doug will provide you an excellent foundation there. That. Right, so I guess I'm kind of answering your question about reversal patterns in here. Yeah. Oh, okay, great, Kevin. Yeah, or Kevin Keith. Yeah, well, then once you have like a kind of a studied pattern, you start to understand the order flow. I would say this, what's really important in here, and guys, hit the like button here. We're going to end here pretty soon, so please hit the like button, and let's if you like this education, okay. If you don't, don't hit the like button. But the reason being is like, we'll cover more of this, and I know that it's working. It's what you guys want to see, and that's what's helpful for us. It's like, okay, yeah, this was a good webinar, and this is what people want to see. So the one thing I was just about to mention before we get going here is what I don't. Maybe we can make analogy in here. Remember how we were looking at the S&P and how it's just being gamed at this area in here, and look at the choppiness in here, right? And what did it end up doing? Like, it ended up doing, we're up at 48, still looking for 50 here, right? But this is not easy trading in here. There is like all of this coming in here in the order flow, and the gaming in here, back and forth in here again, and but we kind of read, we're reading it, and we're understanding the supply and the demand in here, and now we're up at the liquidity here at 48, and looks like it's still grinding up into it here, anyway, what I wanted to cover, which I think is very important, and for you poker players, chess players, any kind of sport or game, basically, it's not just one thing you're looking at. Okay, so there's maybe one thing is more important than the other, but make sure you have two or three. You're going to increase your probabilities a lot. If it stops in icebergs, great. If it's a correlated market, great. If it's another time frame, great. But look for these things together. Okay? That will really increase your odds. So what we're doing here in these webinars is going into the order flow to give you that edge. So I'm kind of assuming that you already are looking at something like it might be candlestick patterns. Okay, great. So we can even show that in here. Show your candlestick patterns in here. And then start to understand, okay, so is this a buy? Well, we came up to this here and it failed up here, right? Now, in your candlestick patterns in here, I don't even know what, looking at 3-minute candlestick here. In your candlestick pattern though, this is failing up here actually. Now, so where's your buy signal? Will probably be down here, or your sell signal, sorry, below 46. If that is the case, and you can make a reason for it here, there's high liquidity here, the reaction to it is sellers, or we're down here. Now, do we get sellers down here? If you do, okay, then you're looking for this to break this range here and come back down to, I don't know, maybe one of this swing here, or maybe the bottom of the range here at 43.50. Okay, so now you got your candlestick pattern in here that you look at, and you've studied them. You like candlestick patterns, and you know how to trade them. But you also have high liquidity here on the offer, and you can look for targets of other liquidity in other areas, like maybe down on the bid, down here someplace, and it matches with the swing. Okay. Right, and also really important element here. What if you're wrong? Okay, you're looking for this to unfold now. So how do you want to manage your risk in here? In fact, I would say going through the scenario of it being wrong is more important, because we know how to. Well, you have to know how to manage your winners too. You're looking to stay in the game here. Right, you want to stay in the ring, and managing your risk and knowing how to take a loss many times, a small loss. is really important. Right. So anyway, you know, come up with your criteria in here. Right. So you know, your candlestick pattern you would have sold in here. Right. And you had your reasons. You had high liquidity here. You even still have high liquidity here. That's at a lower level. And you would still, I would still be in this basically. Right. I think my stop would probably be up here. And if I see large buying coming in and starting to break it, then I just get out anyway. But it has not broken this structure here, right? And there's even more liquidity here. So now I'm just looking for sellers here again, and then I'm looking for the move back down into, I don't know, the candle maybe swing here at 44 and 44 even, or maybe here at 43 and a quarter, you know, something like that. All right, so here again, I got more insight. I have my candlestick pattern, but I got more insight by the volume dots here in Bookmap and the heat map in Bookmap. Right, so this will make your trading better. Right, really, like look like a poker player, you know, or a chess player. Everyone's going to react to the one directional move. Everyone's it's transparent as can be. Right, you got to get some people off their game. You kind of have to dupe them a little bit, right? That's why these levels are gamed all the time by professionals. So we want more things on our side in here, right? So yeah, consider that when you're making your plan and doing your study. Okay, so now it'd be scratched out. Okay, that's it. Okay, I'm done with this setup here. Okay. So that's fine. Look for the next one. All right, guys. So thanks, everyone. Have a great weekend, and we'll catch up with you on Monday then. Okay. Yeah. Thanks, everybody. Hit the like button, and we'll see you on Monday, and continue on with the other educators the rest of the day here. Okay. Okay. Have a good weekend. Bye-bye. Oh, guys, over in Discord here. Let's see here.